Hey guys, I just wanted to check in and recap our OKS trade from last week or 2 weeks ago. It was a very profitable trade for us. We made just over about $3.50. We only had about 60 cents risk, about 5.5 or 6 to 1 risk reward. It's really everything you want in a swing trade. We had a great trail. It was just pretty much the perfect swing trade for us, and we want to go over why it worked out so well, why we like to trade, why we like to chart, and how we executed it, how we trailed it and got out. Okay, so let's first look at the setup. All right, here's the daily chart right here we're looking at. Let's zoom out a bit. We can see this huge bull flag. We'll get that part of the chart out of there. Huge bull flag working on it. And if we zoom even further back, we can see this 4350 area has been a very serious area of resistance. All right, so now it's been working on trying to break out of this since July of 2016. And it finally did, and it was a great breakout. But let's go over it. All right, so we really like the bull flag just in general because it was a really well-defined pattern. And the longer a pattern is defined, the more follow-through you can expect when it finally breaks out. So this being a huge macro bull flag, we could expect a great breakout once it finally does, which was exactly the case. All right. So, but how do we know? It's been working on it since last July. How do we know when to execute the trade, when to get in? It's tried it so many times. What makes this time so special? Okay, let's look over to the weekly chart. So here we have the weekly chart. All right, and you can see it's very wide. Breaking up, breaking down. The high of this week 42.34. You flash forward 2 months ahead. The low is 36.13. Very wide from the top to the bottom of the flag. Now tests this 42.50 level again. Holds up a bit higher on the weekly. Comes up, tests it one more time. Tries to break down and quickly snaps back. Let's zoom in. See this bar right here where it quickly breaks down and snaps back? That's how you know the buyers are in control when something like that happens. So then, after that, it gives us an inside week right at resistance. This little week right here. I'm going to get rid of this little circle right here. All right, this inside week is the one I'm talking about. An inside week is very important, or an inside bar is very important because it's a symbol of consolidation. It's a symbol of buyers meeting sellers. And what do I mean by an inside bar? The high is inside the previous bar's high, and the low is inside the previous bar's low. It's a lower high and a higher low. It's just tightness, it's consolidation, it's buyers meeting sellers. So what we can infer is that when one side wins, in this case it was the buyers, we can expect a big explosive momentum move as follow through because the sellers had to give up. It was their last stand. When we have inside bars at resistance, we know this 42.50 was huge resistance. We know that if it breaks resistance, this is the seller's last stand right here, this little inside week. If they take a loss here and they let 42.50 break to the upside, they're going to have to cover their position, which includes them buying the stock. And they know traders are all looking to buy the stock through the high. So they'll get the huge momentum effect that we're looking for in breakouts. So once we saw this inside bar, we knew that if we could break it to the upside, we would get the breakout we're looking for. So the reason we fell in love with this chart this week was the quick snapback right to resistance, followed by the inside bar, the inside week. Look how tight this week is compared to this week. It was just fully consolidating. And then once it broke it to the upside, we got that momentum move we look for. So let's go back to the daily chart. So this is how we started the trade. We saw it touch 42.49 here. We were waiting for 42.50. We can see the high and low up here. This H is the high. So this day it was 42.49. So in this day that finally breaks it, you see the high is 42.94. We initiated the trade this day. We put our stop at the low of this day, 41.85. Okay. We keep our stop here until we see some follow through, enough follow through that we don't want to give back. And the reason we have a trailing stop, which right now we're using this red to symbolize our stop, the reason we have a trailing stop is because we want to make money. We don't want to give back too much of the trade. This could be a long-term hold for some people. you do all this work and it comes back so quickly. It's like I was in this trade for 9 days and made all this money, but then I gave it all back in 4. That's what we want to avoid. We want to lock in profit and lock in these gains. Simple as that. We're short-term traders. We want to get in and get out. So we initiated the trade this day, held our stop here because we didn't see enough follow-through to really move it up yet. The next day, we get a little more follow-through. Nothing huge. It closed right around the same level. It closed 42.76. Then the next day is when we get some nice follow-through on some increased volume. This day right here, we see the high is 44.15 and it closed 43.67. And if we look down here, the volume, this is day of volume, increased significantly from these 2 days. So when we see something like that, all right, let's move our stop up to low of this day. Boom. And now we're just trailing it. So the worst we can do, our price is 42.50, and the low of this 43.44. We're pretty much guaranteeing ourselves making at least $1 in the trade. We don't, and on the worst case scenario, we're making $1. So then the next day, we see this super high volume day and another up day. We've realized that we just got to keep moving it to the low of the day. This is how we're going to trail the stop. So we continue that trend of trailing, just trailing low of day, up, another green day, trail it, another green day, trail it, another green day, another green day. Now the first red day we've seen in a while. It didn't take out the low of the previous day. So we didn't want to automatically just get out this day because it was the first red bar. We wanted some confirmation. Maybe it was a little trap and it opens up next day higher and just continues the pattern. But since we found out our trail of the previous low of the day's stop, we're going to leave our stop at the low of this day, 46.09. So we had a 46.08 stop. Our price is 42.50, and we pretty much expected to be stopped out this day, and we were. But look what we missed out on. We missed out on all this downside action. We had a great trade. We locked in our profits up here, and we'll regroup. And now if the trade sets up again, we have no problem buying it. We love the stock, all right? But I don't want to get married to the stock. I don't want to have to deal with the downside if I don't have to. So we locked in this profit by having a trailing stop. In summation, that was this. I mean, this trail was absolutely perfect. And then, I mean, I bet a lot of people had the same idea we did. Trail it at this day and then sell it, and everyone pretty much got out. It looks like held that recent 42 support, 42.50 as recent resistance and support. So it could be fine still. We're not in it, but we don't want to be in it after a day like this. And this is why you have trailing stops, so you don't have to deal with close this day at 44.50. Giving back so much hard work of profit. We don't want to do that. So in summation, figure out your trailing stop, stick to it, make a plan. There's no emotion attached to this trade. We just had to sit there watching it. We had to stop where we placed it every day. I didn't even have to think about it. I barely even watched this stock while I had it. Just had my stops and moved on. All right. So trailing stops very important. Inside weeks at resistance, also very important. And last point, the longer drawn out a macro pattern is, this is a weekly chart. Let's go to the daily. The longer drawn out a a macro pattern, this bull flag, the more follow through you can expect. All right, and those are the 3 things that I really want to make sure you guys get in this video.